The U.S. economy is growing at a strong pace again, as revealed in the latest GDP numbers. Hello and thanks for joining us for this week's Fastest 4 Minutes in Finance. I'm Scott Inman. Gross domestic product grew 3% in the second quarter of 2025, according to the Commerce Department. That's a reversal from first quarter GDP, which was down 0.5%. But a deeper dive shows it may not be all good news. Now, GDP is the value of goods and services that the United States produces over a specified time period. The major components are consumption, government spending, net exports, and investment. According to the Bureau of Economic Analysis, the jump in Q2 was attributed to a decrease in imports, which would put net exports more in balance, and an increase in consumer spending. Consumer spending rose 1.4%. Government spending was down, and investment was down more than 2%. And it's that drop in investment that has some economists calling the GDP report a mixed bag. According to the report, the largest contributor to the decrease in investment was private inventory investment. The numbers suggest that businesses are slowing down manufacturing and inventories for wholesale trade. This is a reversal from the first quarter, when companies were increasing inventories, trying to get ahead of President Trump's impending tariffs. So the concern about higher tariffs may have affected business operations, but it hasn't affected prices. Also in the report, the price index for gross domestic purchases increased just 1.9% in the second quarter, compared to 3.4% in the first quarter. Now, the fresh data was met with very little excitement from investors. The major stock market indexes moved up slightly in reaction, marking a continued cautious optimism. The U.S. economy continues to be on strong footing, but future growth is uncertain as businesses and investors continue to watch the direction of interest rates, inflation, and Trump tariffs. Certainty is not often found day to day, but creating a plan for your financial independence should remain dependent on the belief in the long-term growth of the U.S. economy and in the long-term performance of the stock market.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.